Hello guys. So in this session, we will be talking about the SEBI's new rules for option traders. So SEBI have introduced some major changes which are affecting the option traders. So we will discuss how it is going to affect or impact your trading, the capital requirements and the overall strategy and everything. That is what we are going to discuss in this session. So the introduction of larger lot sizes, you see Nifty from 25 to 75, Bank Nifty from 15 to 30. So the larger lot sizes and also shifting the contract values and adjusting the margins, and all these will actually alter how we approach option trading and how we have seen and how we have did so far. So let's break it down into simple terms and will help you to understand these changes to stay ahead in the game. See, let me tell you one thing. If you are trading with one lot, then it is going to make a huge impact. It is going to affect you because you need now three times. Right, one lot, if you're trading, whether you're an option buyer of one lot or seller of one lot, you need three times the capital. But if you're a person who's normally trade with, let's say, in Nifty 100 quantity or in Bank Nifty 50 quantity, that's how normally in our training session also we do, right? At least 50 quantity or 100 quantity we buy and then we exit half and then we'll continue trailing like that. So in that way, it is not going to affect you much. That we will try to understand when we proceed further. So the new regulation, what happened is the contract size have increased significantly. For instance, if you see Nifty contract size, which was previously 25, will now be revised to 75, which is three times. Similarly, if you see Bank Nifty lot size, it is doubling from 15 before to 30. Now, guys, remember one thing. It was before also, it was like that only. It was 25 and then to 20 and then 15. Okay, so this keep on changing and it is not, I don't think before also Nifty was 75 and it was reduced to 25. So don't think that it is going to affect you much, because normally we trade with how much quantity? 300 quantity, 400 quantity, 500 quantity, 1000 quantity, or at least 200, or forget about everything. You trade with 100 quantity. No one is trading with 25 quantity or 15 quantity of Bank Nifty. If so, it is going to affect you. Otherwise, also hedging and margin requirements and other things are there that we need to discuss. But I'm saying from an option buyer, this is not going to make a significant impact. For example, you are buying, let's say, 15 quantity of Bank Nifty with, let's say, option premium is around 200 rupee. Okay, so 15 quantity, you need to pay 3,000, which is your capital required. Now you need 6,000 because it is doubled. So don't you have that 6,000? If you don't have, then how can we trade, right? So I'm talking about someone who's trading with, let's say, at least 50,000 capital. So normally, when we come to the market, the minimum capital that we will have is 50,000 at least. Otherwise, you cannot do anything. So when you have that 50,000 capital, this is no way going to affect the option buyer, right? So you can buy options as you did before also, but you cannot buy that one lot as you see before, that 25 quantity. Now one lot is 75 quantity. That's the only difference. It becomes three times. So that may significantly affect your risk reward thing. The risk will also be higher, the reward will also be higher, because instead of 25 you are straight away buying 75. That is the difference. But if you're trading with already 100 quantities, this is not going to affect you much. Let's again break it further. So that's the example which I've given to you. Let's say the premium is 200, right? So if you need to buy earlier, if you need to buy this one, Nifty 25 quantity, let's say premium is 200 or 100, let's take it as 100 rupee Nifty premium. So how much you need to pay? 2,500 before you need to pay. Now how much you need to pay? Three times, 7,500. So you are coming to market with 7,500 capital or 2,500 capital? No, right? You at least have that 25,000 or even 20,000 or even 50,000 capital. So I don't think that this part is not going to affect you much as an option buyer. Okay, so the thing is that in one lot, if you're trading earlier 25 quantity, now 75 quantity, so your risk reward have changed significantly if you're a one lot trader. That is something there. Okay, so the increased size means the traders must prepare for 2 to 3 times more capital that is there before you participate in the market. Otherwise, it is going to be very difficult. Now, let's also look at the impact on small and large traders. See, the change will affect the traders differently based on the scale of operation. That's what I told you. So if you're someone who trade multiple lots, such as 100 quantity, 200 quantity, the impact will be minimal, as I have discussed before. So you're already trading in that quantity, but small traders who previously bought like single lots, at lower premium, or someone who's trying to learn by buying one lot, then now you are exposed to more risk. Okay, otherwise it is not much changing. And see, for these traders, what is required is strategic adjustments is necessary to balance their risk reward effectively. That's something which you need to focus on. Now, here, why you need to manage risk aggressively at this point of time? The reason is larger lot size. Risk management is very important here. And imagine selling an option. We'll talk about selling an option. Let's say a 25 unit of lot size. So if the market moves, let's say 200, 300 point against you, then your loss is manageable because you are trading in 25 quantity. But with, let's say 75 quantity that you're trading, then what will happen? You are trading that 75 quantity out of compulsion because that is a lot size now. It will triple the risk. So risk management is again very much necessary. But remember, Nifty was trading with this much quantity before. Okay, but that time Nifty was in 10,000s and 12,000s and 15,000s. As and when it went higher, the lot size have reduced actually. So the movement and the volatility is getting higher when Nifty is going up or Bank Nifty is going up. Okay, so the point is you need to be very disciplined when it comes to money management. You need to avoid this kind of over leveraging and also focus on smaller but consistent trades to minimize the drawdowns. Let's also look at the difference between option buyers and sellers and how it impact the buyers and sellers. See, there has always been a debate between option buying and selling, right? So sellers generally require more capital due to higher margin, but also face limited risk if managed well. Time decay is actually in favor of them. On the other hand, if you see, option buyers often gravitate towards lower cost because the upfront premium is very less that you need to pay. I told you if you need to pay that trade that 25 quantity, you just need 3,000, but that's not the case with seller. You need 1.5 lakhs now, even more you need. So the advantage for buyers is lower cost, but at the same time high rewards are expected, but the time decay and everything is in their favor, in not in your favor, and the probability of success is also not in your favor. So premium decay will act against you. Okay, so because of that, you need a precise market time, entry. Timing is very important. For sellers, timing is not important. The more you stay in the market, the better it is as you capture the time decay. So if you look at SEBI's new rule, now it is making it hard for buyers to take large position without significant capital. Again, encouraging more cautious and calculated approach. So that's what one point. I'm talking about the small traders. Okay, big traders, whatever it is, as long as you have capital, you can buy anything. Same, okay, big players, this is not going to affect you much. So strategic adjustments which are required now with a smaller capital. So see, the thing is that if you have limited fund, diversification and proper allocation is very critical. So if you're trading with, let's say, 20,000 or 50,000 or even 25,000, firstly, it is very difficult. Okay, so again, you need to split up investment across stocks or other instruments instead of solely focusing on options. So that because one move, if you're entering in options and one move is going against you with this limited capital, the chances are your capital will be wiped out. Okay, so you can only buy. And when it comes to buying, if your entry is not precise and not as per the timing, then the chances are even if the market stay there itself, still your premium will go to zero due to the time decay. So you need a precision in entry, and especially when you have this smaller capital. So it is better to trade in stocks or invest in stocks. That's what I will suggest you if your capital is small. So that's how you can actually reduce the risk. And guys, again, prioritize learning always. Start small. Okay, now earlier you were doing it with one lot. Now also you're doing it with one lot, but your risk is now 3 times than before after this change and everything which is implemented. So focus on that, remember that, and try to capture consistent profits, consistent points rather than, aiming for unrealistic return in one go. That is not going to work out in your favor. Okay, again, always try to focus on the points that you capture. Let's say I want to get 20 points a day. Once you get it, you come out of it and find a strategy that give you 20 points a day. If you can consistently make that, then you will stay in the game forever. Whether it is small capital or large capital, if you can make that 50, 100 points or 20 points, if you have a strategy that consistently give you, let's say 20 points or 50 points or even 100 points, not necessarily every day, but when your days come, you will get that points. If that strategy is there, then you can be confident and you can keep, staying in the game. So again, your success in trading should not revolve around, taking large quantities. Okay, you can take large quantities once you are sure that this is a point that I'm going to get in this trade. If you're very much sure, let's say if I trade Bank Nifty, this 100 point I'll get. If I trade Nifty, this 40, 50 points I'll get in this trade. So that's what. So focusing on that 40, 50, 60 points, and you should be knowing where and when I will get that point. That's very important. So don't simply keep on increasing your position size or quantity just to get more profit. So it won't work like the way you will get 10 points or 5 points and 10,000 quantity. That won't work out. Don't do that. So as and when your confidence increase, then you can scale up and you can, add more capital. Then you can add more quantities. Otherwise, keep focusing on the points that you can capture. So again, guys, it takes time. So we need to prepare for long term. Keep doing it, keep staying in the market. So initially, these changes may be challenging because Nifty is also going up and the lot size is also going up. So the premium is also heavy now. Bank Nifty, if you need to trade, that is very difficult, right? Because already it is monthly expiry and from 15 lot size to 30 lot size. So the premium for one lot trader is going to be very, very high that you need to pay. So capital requirement is also slightly higher. So over a period of time, market evolve, you will also evolve, and you will see changes in yourself. Again, further revisions in lot size and margins will happen. So this is an evolution. So this keep on happening. So the slot size have reduced before, now it is increasing. So okay, so this is a process of evolution and it keep on happening, and we need to adapt it to the changes which is actually happening. So the essence of trading will remain the same, whatever it is. What is that? It is about managing risk, maximizing the opportunities. So stay in the market, stay live in the market, protect your capital, understand the strategy, learn one strategy, and that strategy should be giving you some points consistently and should be giving you a not only a livelihood, should give an opportunity to make wealth also. And the profit that you make from that learning, that point that you are getting, invest for long term, and from there you make the real wealth. So again, what my point is, it might be challenging, it might be a hurdle at this point of time, but there is always opportunity in everything. So stay in the market, learn, and try to focus on the points, try to focus on risk management, whether you're a buyer or a seller. Keep on learning. Consistent learning is very important. A calculated move, also calculated risk is very important. So discipline, okay, that's again is what I want to tell you. Patience is another point which I want to mention. So guys, stay in the game. Changes will happen. Market is evolving. You are also changing. By day, you keep improving. So my point here is every day, if you can improve from previous day, like at least 1% improvement you can make on yourself in terms of learning, in terms of your discipline, in terms of your risk management, then you will be changing as a person also overall. And definitely that will affect your financial situation. So that's about this session. Thank you so much. I hope this is helpful for you. Thank you, guys.